It's Wednesday, the 3rd of December 2020. Welcome to the Fear and Greed Business Headlines, the business news you need in just 5 minutes. I'm Sean Aylmer. Today's headlines. The housing market in Australia is heading back towards pre-COVID levels, with prices rising across the country. That's our main story. Plus, the Reserve Bank keeps rates on hold and says the economic recovery is underway. Australia wins international support in its stoush with China, and why the share price of fast food operators are surging. No one told the housing market that there's been a pandemic. The average price of a home across the country is rising again, with all capital cities recording higher average prices last month, according to CoreLogic. Regional house prices are up as well, and according to market economists, the average price of a home in Australia is on track to reach the record highs of 2017 by the middle of next year. Brisbane, Adelaide, Hobart and Canberra are already at record levels. Perth and Darwin are well below their 2014 prices, while Sydney and Melbourne have been stable all year, and building approvals rose for their fourth consecutive month during October. There's been many factors supporting house prices and approvals. Number one is low interest rates, and number two is government incentives, including stamp duty concessions, the federal government's home builder program, and an expansion of the first home loan deposit scheme. On top of that, there was pent-up demand from the middle of the year, significant government income support, and it seems a bit of FOMO in the market. People are worried they're going to miss out on buying during a lull. Next year, easier lending standards are due to be introduced, which will also support the market. However, there are some headwinds. Unemployment and underemployment could hurt housing in 2021, while a lack of migration and low rents will definitely hurt inner city unit prices. The housing market has been incredibly resilient. Forecasts of price falls from peak to trough of 10 to 15% have been replaced by drops closer to 6%, and now the market's rising again. The central bank, governments and policymakers will all be worried about an asset price bubble emerging in the mortgage market. In overseas news, Wall Street hit a new record high overnight on hopes that a COVID-19 vaccine will be available within weeks. The Paris-based Organisation for Economic Cooperation and Development upgraded its global growth forecasts, saying worldwide GDP this year was expected to fall by 4.2%, less severe than the 6% contraction forecast back in June. And next calendar year, the global economy is tipped to expand at 4.1%. The OECD forecast that Australia would contract by 3.8% in 2020 and then grow by 3.2% next year, but it cut its forecast for growth in the US economy. And Britain's Arcadia Fashion Group, which owns several fashion labels including Topshop, has collapsed and got into administration, putting at risk more than 13,000 jobs. It's the UK's biggest corporate casualty of COVID-19. On to local news, the economic recovery in Australia is underway, according to the Reserve Bank of Australia, though it will be uneven and drawn out and remains dependent on significant fiscal and monetary policy support. Following the central bank board meeting yesterday, in which interest rates were left unchanged and the size of its quantitative easing program was maintained, the bank indicated it was in a wait-and-see mode. Under its charter, the Reserve Bank must aim for low inflation, it can tick that one off, and full employment. The labour market remains problematic, and the bank indicated it would do more in the bond market if it needed to do so. The Australian Bureau of Agricultural and Resource Economics and Sciences has forecast the second biggest crop ever, just 12 months after the drought broke. 51.5 million tonnes of wheat, barley, canola and other winter crops will be grown this financial year, second only to 2016-17. One of the Chinese Communist Party's main mouthpieces has called Australia evil and warned warships carrying out patrols in the disputed South China Sea were at risk of being attacked. The Global Times newspaper is at the extreme end of the spectrum and needs to be taken with a grain of salt. Still, the comments would have been made with the Communist Party's knowledge. Meanwhile, Australia received support from New Zealand Prime Minister Jacinda Ardern, who said she'd registered her concern with China over a tweet over the weekend depicting an Australian soldier slitting an Afghan child's throat. France said the tweet was not worthy of a country like China, and the Trump administration didn't comment, but said it would serve Australian wine at a White House function this week after Beijing imposed tariffs on the local drop. Collins Food, owner of KFC and Taco Bell, has reported its strong 6 months to mid-October With sales up 11% to $500 million. Its share price was up 11% yesterday. The other big mover in the market was Domino's Pizza. The quick service restaurant held an investor day on Monday evening after the market had closed, and its share price yesterday jumped more than 12%. Domino's last year made 209 million pizzas. That's 3 orders every second. Queensland released its budget yesterday and said total debt will reach nearly $130 billion by the middle of 2024, with COVID-19 triggering a collapse in revenue. And finally, the Australian Open tennis tournament is likely to be held in February, 2 weeks later than normal. Organisers are hopeful of crowds between 25 and 50% of usual capacity. That's the Fear and Greed business headlines for today. There's more on all of these stories in today's full Fear and Greed podcast, as well as an interview with McGrath-Nicol advisory partner Jason Ireland about the importance of working capital. I'm Sean Aylmer. Enjoy your day.